symbol PLTR, Palantir, is a data and AI software company that helps governments and big business turn huge amounts of information into useful decisions. It started with intelligence work, but today it also serves commercial customers and has become a major name in AI analytics. And one of the interesting facts is Palantir, it went public through a direct listing in 2020 instead of a traditional IPO. Ever since then, investors have been debating its real functionality. Is it an AI hype, or is it a government contract company, or is it a defense? It's growing so fast. Let's look at Palantir today, where to buy and where to take profit for the near term. Let's look at its fundamentals first, because if the fundamentals is not a good number, then there is not a buy. We don't even need to look at the technicals. For fundamentals, let's look at the easy ones. For PE, it is how expensive the stock looks based on future earnings. So it's like the regular PE before looking. It's at 81.38. It's very expensive. For comparison, NVDA is around 20, although they're not the same stock, same area, but that gives you a sense of where the comparison point is. Free cash flow. So the company has 2.69, almost 2.7 billion of free cash. It is positive. That is a good thing. It means it has some money to move around, do some other investing, pursue research in other areas. Revenue growth, it is how much a company's sales have increased over time. We want the company to keep growing. It's at 53.03. It's growing very fast, as you can see. Sometimes growing too fast might not be a good thing, because if the demand is not there, you just keep growing, that's eating a lot of the cost. PEG ratio, price earnings to growth ratio, it shows whether a stock is cheap or expensive relative to how fast it's growing. It's like the regular PE ratio, but add a growth factor to the formula. PE, PEG ratio around 1, it's fair valued. That means PE matches the growth rate. PEG ratio less than 1, it means undervalued. That might be a discount for buyers like us. Greater than 1, it could be it's overvalued. That means we're paying premium for the growth. Palantir is at 1.58, so it's a little bit overvalued. Return on equity, how much profit a company makes for every dollar shareholder invested. So it is how efficient the company is making money for us. We want the company to be very efficient spending our money, right? It's at almost 32.6%. Above 20 is a very strong number. It's extremely well. Micron is above 30 as well. So here is the dilemma then. If the company is doing so well, it's profiting, it's growing, but the PE ratio, the PE is so expensive, should I buy then? Some people would say if the growth, the return is so high, then it doesn't matter it's expensive or not, because it's doing what it's supposed to do. It is growing that speed, it's generating money at that speed, so it's worth it. That is true. Is in some case, the 4 PE might be ignored just because the company is making so much money. However, some conservative investors will hold on and wait for the right price to come. So that said, if you decide to buy, where is the buy point and where to take profit? We all know which stock to buy, which hot stock to get in, but nobody talks about where to take profit. And also, in my opinion, buy and hold is not a good idea. That's my personal experience, and I will take profit at the right price. I can't sell at the top. I don't know where's the top, but I know my target. Just buy and hold forever. Nowadays, in this market that moves so fast with all the news, with all the new regulations on all the things, tariff, it's a little bit risky. So let's look at where is the buy point. Looking at the chart, you can see since this year, February, it's been under 200 SMA, and the graph looks like it's just keep going down. But recently, it looks like it has hit a temporary bottom. It tried to go up. So a good buy point would be once it stands strong above the 200 SMA. That would be around 163, 164. So once it stands strong, then there's a chance it will go up and go to 200 all-time high. Take profit would be around all-time high as well. Or you can go a little bit under that. 200 to 205 would be a good take profit point. So from 160 to 200, it's a really good profit zone. Cut loose is a tricky point, right? If you buy now, you think, oh, it's so cheap, buy now. Then where is your cut loose point? 200 SMA is a safe support, long time support. Right now, it's even below the support, so you don't even know where to cut loose. But if you buy at 160, and if it go under again, then you know maybe not panic selling, but watch what it does around this area. If it just keep going under, there's no bounce whatsoever, then maybe it's time to cut loose. But if you see it try to attack the line and it try to go up, then maybe it will have a chance to swim above again. So cut loose would be below 160, about 150. 155. So it would be time to move on to a different stock. And if you miss the buy point 160, then when to add, where to add if you want to add more. It will be 180-ish, but the more it's closer to all-time high, it's not really a add area anymore because it's closer to the take profit point. A lot of people would start taking profit there. And also the important dates for Palantir. August 3rd is earnings coming up, expected move 15%. So it could be a chance for it to hit the 200 SMA and see where it's going. It could pass through it, or it could hit the wall and come below again. Although Palantir is heavily tied to government contracts, but you would think, well, that's good. Government won't go away. The company won't go away. But what if the government signs contract with different company? What if something goes wrong? And if government is the main customer of Palantir, right? So it definitely has its risk, but so far the number is saying the company is strong, making a lot of money. All right, that's it. Thank you for watching. I'll see you next time.